Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Patsati, and in today's market, government bond yields are steady, while the Sensex and rupee falls, continuing the fall in the last few days, largely on the back of rise in U.S. Treasury yields that has gone up to 1.55% on worries of the Fed looking to raise interest rates sooner than expected, and also to stop their bond purchase program gradually starting this calendar year. And RBI has started to reduce the money in the system through a process called fine tuning, and they are taking money out for up to rupees 2 trillion. There's a lot of money available in the system, so it really doesn't matter. But the market interprets this signal as that the fact that RBI is slowly taking small steps towards neutralizing a very, very accommodative monetary policy. And it also shows that RBI is worried about inflationary aspects. We all know what's happening in the power sector right now. There's a huge amount of shortage of power domestically and globally, and all energy assets are rising, prices are rising, which will filter down to consumers. And we're also seeing a large problem with shortage of transportation in containers, in terms of the number of ships available, etc. So all that is hurting the cost of logistics, and this is again filtering down to higher prices in all kinds of products. So clearly, I think that should be, and the festival season approaching starting October, there's going to be a huge demand for consumer products, and that with supply being limited, it could raise the prices of products that could lead to higher inflationary expectations. And RBI is also anticipating maybe a market reaction to the Fed's policy of tightening interest rates sooner than later, as also reducing the amount of bonds they buy and even bring it down to zero. NTPC, the National Thermal Power Corporation, is planning to raise rupees 18,000 crores or rupees 180 billion through issue of bonds for capex. So clearly they want to set up more capital infrastructure, power infrastructure to generate more power, both thermal and green power, etc., which would ease the supply shortage in the country. Clearly, I think it's a good sign, because any capital expenditure creates a lot of other secondary and tertiary demand for investments, and this is an overall good sign for the economic growth. Don't forget to sign up for a bond advisor certification program. You will understand everything about fine tuning of money, the money available, how it affects the short end of the curve, as the short maturity bonds when RBI looks to suck out liquidity, all about global bond yields and Fed and its impact on the bond market and on Indian bonds and RBI policy and government policy and other asset classes, including equity. And these are online programs, 1 month online programs. We have basic and advanced. And our programs have been embraced by the best in the financial services profession over the last 8 years. And suffice to say that it's not only fundamentals, but it's completely practical through cutting edge real-time analysis of the bonds that helps all the participants to equate the current nature of bond markets to the fundamentals they are learning in the program, and also advise the clients for the best investments given their understanding of the fixed income market. Thank you for listening in, and don't forget to subscribe to our YouTube channel if you're not done so already, and visit INRBonds Quick Invest for investing in the best bonds at the best price with the right information and the most transparency. Thank you very much.